Hello everyone, in this video we're going to look into this company called Liveperson. It's sitting at about $60.90. Has a market cap of about $4.2 billion. That's considerable. Let's look into this company and try to understand what this company is all about. It's into conversational AI, so it makes chatbot which are powered by AI and machine learning, where people can communicate with this chatbot, and this chatbot would relay the information to the various brands, and people can also purchase or put out reviews, have customer service. All these issues that are normally resolved through phone calls or emails can be now transitioned into a chatbot. They're also trying to do the e-commerce aspect where people can buy and trade items using a chatbot. The interesting is Cathie would recently started adding this to her ARC W ETF, which is the next generation ETF. And right in August 4th, you can see before that there were no shares. And right in August 4th, she started to add shares. It looks like August 19th, she sold a little bit. But yeah, she's been constantly adding shares to their ARC W ETF. But let's try to understand what this company is all about. If Cathie is adding, it doesn't mean everything is good, but it's something definitely that should pique our interest to look into what this company is all about. So let's get started. Now, the financials of the company shows that this is the annual report which was filed for the year 2020. And you can see 2020, 2019, they have been consistently increasing their revenues. So it was 222 million to 18 million to 50 million to 90 million, 366 million. Back in 2016, 2017, there was not so much of an increase, but decrease. But back later on, it's been consistently increasing. So is the cost of revenue. So if you look into this, 106 million for the cost, the sales and marketing is 150 million, general administrative is 60 million, product development, the research and development is 100 million, which is good. The restructuring cost, I'm not sure what that was all about, but 29 million. So all in all, the company is not profitable. It's consistently bleeding money all throughout these years. So this is something which could be effects of, you would see quite a bit of dilution that might happen. But something definitely to point out is where the revenue is consistently increasing. This is the annual report that was filed back in 2011. So you can see back then they were consistently increasing their revenue. So year over year, they have been growing, which is a good sign and a healthy sign about a company. Now, let's look into the Liveperson financial on Google. If you look into this is the max chart. And this is the stock price movement, which has been happening for the past few years. And this is an old company. This was launched back in 1995, and the CEO founder is still running this company. So it's fairly an old company, more than 2 decades old. And you can see the stock price has been consistently in that, about $1 or $20 maximum back in 2012. And you can see the price has been consistent. They slow down, but right in 2019, 2020, when COVID hit, and the whole euphoria in the market started, you can see how the price in the market has jumped up considerably. And thinking about it, market cap is 4.2 billion. The company is having revenues of about 200 to 300 million dollars per year. And for a market cap, it's not profitable. And for a market, giving that market cap about 4.2 billion, I'm not sure how much that is going to go about. But definitely, it is a growing company which is moving in a very good pace. If you look into this quarterly filings, all these quarterly, every quarter they have been increasing. Here, annual is something interesting. So if you look into this 2016, 2017, and 2018, they have been in a consistent growth. But if you look into the losses, right in 2019 and 2020, the losses increased considerably. And that's where the CEO came back and said, hey, yes, it has been that the reason, because they've been spending a lot on the market development and marketing and sales for the product, because right now it's a boom. Right in the COVID era, people are trying to do things remote. All the purchasing and everything is going out to remote, and there are not many people in the offices who are doing things and who are available to answer phone calls. So they feel this is best time for themselves to grow and expand themselves. And you can see the revenue has also matched to the amount of spending they did. And yes, and that's where the losses are coming through. Next, you have the analysts on tip rank. It shows it has about 6 buy and 1 hold rating, and a average market price of about 68. $68.50 and a high of 76. It's right now sitting at about $60. And there are a considerable number of analysts who are looking into this company. About 6-7 analysts who are definitely tracking this company, which is a good sign. Now let's look into the insiders about the company. Robert Locascio, he's the gentleman who's running the company right from 1995 onwards. This is his second company right out of college. The first company did not go so well, and then he shut it down. And this is the second company which he started. And since 1995, he is the founder and the CEO, which is a good thing. Chris Meyer in his 100 Bagger book mentioned that most of the 100 backers were founder-run company, because when you have a founder running the company, he doesn't worry about his image. He doesn't worry about what the company or what the world is going to think about him. He only thinks about the company. What is the company doing, and how it's like a baby for the founder. That's a good sign. So the founder and CEO is still running the company. They've been doing it. Now, this is interesting. The name of the gentleman is Alex Menelli, and he's right now the Chief Technological Officer or the CTO of Liveperson since 2018. And interesting is, if you look at his LinkedIn profile, he worked at Amazon and he was the Director of Product and Technology Development. He headed the Alexa product in Amazon. So he was part of that conversational AI, which sits behind the Alexa brain. And he basically, Liveperson brought him on and offered him the CTO position for Liveperson, which is interesting. Now, this is Data Roma, and it tracks a little bit of the super investors and also tracks all the insider activity. And this is interesting. So if you look into the real-time insider transaction data, right in 4th August, Alex Minelli, the same gentleman which we spoke about, he's been selling. Many other people have been selling. You can see all of these, so much of selling going on within the company for the past few months. And this is going back to 2020. If we go a little bit deeper, we might get a little bit more zoomed out picture, but you can see that how the sales have been going through. For the past few months, they've sold about $37 million worth of stock for the company. Now, Monish Pabrai mentioned that people sell shares for a variety of reasons. They sell reasons. It could be a variety of reasons. It could be something that they need for something, for the financial reasons, something from the tax perspective. It could be quite a bit of reasons. But if they're buying, they're buying only because they feel that the share price is cheap. And you can see within all these times, there is no buying going on. So the owners and the insiders, they understand that the price of the share is probably hiked up at the moment, just because of the euphoria which is happening in the market at the moment. But definitely something to keep an eye for. Now, next is the amount of shares that are held by insiders. This is interesting because it's about 6.79% of the company is held by the insider or the owner himself. And this is a good sign because Charlie Munger mentioned, or it's more about the skin in the game. He basically mentioned, you show me the incentive and I'll show you the outcome. So here a shareholder's interest and the insider's interest, in this case the owner's interest, is in the same direction, because now here the owner would also want the share price to go up. So that's a good sign. Now let's see what the big guys are doing. This is the institutional ownership. And you can see these are the top four or five institutions who are holding the company. And BlackRock is very heavy on this company. And they own about 14.4% of the company. Next, you have Robert Locascio. Vanguard holds about 10%. And Robert, who's the CEO and the founder himself, he owns about 7.7% of the shares outstanding. So that's something definitely interesting. Now you have the super investors. So this is Data Roma, which attracts activities of all super investors, like going anywhere from Warren Buffett, Monish Pabrai, Charlie Munger, Lilu. Everyone sits here and they track their transactions over the quarters. And here in this case, there is no super investor invested in this company. Now next is competitors for the company. You can see this was a Medium article, and this particular gentleman basically put down all the different types of conversational AI and Liveperson is nothing but in conversational AI. And it brought in all the different types of competitions that different companies are doing that. And this is a whole network. It's a jungle of different conversational AI that are out there. And I looked up top 50 or top conversational AIs out there, and Liveperson was very difficult to find in among these lists. I couldn't find it in this list. I couldn't find it in this list either. Not in this list either. Not in this list either. I may be wrong. I'll put the link in the description for you to look into yourself. But yeah, right here in this particular one, I found right in the section of 7 or 8 list, you have Liveperson here sitting here. So Warren Buffett mentioned the type of companies he looks or he loves to invest in. He gave his basic philosophy is the company should be a very good castle. So imagine a castle, a very precious castle. That's what the company is. And the castle should be run by a very honorable duke. The duke who's running the castle, he should be honest, he should be honorable, he should be someone with good morals. Number 3 is the castle should have a very strong moat. A very strong moat. There are no the competitions out there. It should be very difficult to destroy a business like Coca-Cola, like Snickers, like gum, Wrigley's gum. So these are companies which are very difficult to be eradicated. If someone had $1 billion, would they be able to destroy the business or not? And that's where the moat comes in. And if you look into this competition, the amount of competition which is out there already, the people who are interested in such a technology, they already have so much of information, so much of product on the market to look into. And they can review, they can understand if something works out, something doesn't work out. So it's a jungle out there for them to try and test. So I don't know how they'll come, get their hands on Liveperson as easy as possible. But definitely, these are just points to look into. I could be wrong, I could be biased here, but I want to share these points with you. Do your own research before you do anything with the company. With that, take care, stay safe, bye-bye.